Video is probably going to be a little different. I have been getting a lot of feedback from people that I know, and they've been watching my videos, and they're like, hmm, they they understand what I'm trying to say, but it seems it's so different for them. It's like it's very hard for them to also kind of like sit through it and really understand what I'm trying to do. They get the whole idea about trading, but it's like the way I also explain myself to them also make it harder for them to also understand it. It's like you can know something, and teaching it is another thing because you know it based on your own terms. But the mind works way different. It's like we all have a way of reasoning. We all have a way of understanding something. It's like, and it's something that I realized growing up. I used to think that if I saw something the other way, or I saw something another way, people have to see it the same way. It's like that kind of a way of thinking is like you can see a picture, and probably I might be looking at maybe the person's eyes, someone else might be looking at the nose. It's like it's the same picture, but we have a different way of our interpretation, or our focus is different. So I think as an honest feedback, trust me, because you can really know something, but teaching it is another thing. So today's video, I just wanted to really deal with. It's going to be a very lengthy video. I normally do short videos because I used to think people really couldn't sit through longer videos, but I think I have to probably today I have to extend the time to, let's say, if 50 minutes approximately. If it's more than 50 minutes, no problem. But the goal of this video is to literally let's deal with the very basics of trading. Let's just forget about everything you see on the screen. Just try and look at the screen from the standpoint of trading. And what is trading? Trading is basically buying and selling. Buying and selling. So you buy and you sell. All right. So sorry, buy and sell. So it's like, what are we buying and what are we selling? We are buying an asset at a different price, or at a price, and we are selling it also at another price. It's like you buy something two, then sell it three. It's like normally we all do this thing. We trade. Everybody's a trader. Everybody's a salesperson. It's like we are selling something. So I'm buying something at two, and I'm selling it at three. It's like I buy something at three and I sell it at four. So the profit margin is one. So it's like trading is an act of buying and selling. So this is basically the digital, the virtual way of trading an asset. You understand? So what you see here is a chart. This chart literally gives you an overview, gives you an insight pertaining to the assets that you are trying to trade. So, like I was saying, it's like if you really want to learn how to trade on the interwebs, you need a chart. You understand? So you cannot trade without a chart, because the chart literally gives you an insight into the assets. But when I say an insight, it means it gives you the patterns of movement, or the patterns of direction pertaining to the assets. When I say the patterns of direction, trading happens in directions. You understand? So you can see from here, and I know I'm not really trying to deviate from the course. I'm just trying to explain the pattern of direction, because I'm trying to explain every single word that I use, because there are so many jargons in trading that sometimes the jargons makes it hard for newbies to literally understand what the person is trying. So it's like the patterns of direction means we trade in direction. It either goes up or it either comes down. That's the pattern. We have three patterns, and a consolidate. Consolidation means it's not going up and it's not coming down. It's just in between. So this is a typical trading direction, upwards and downwards. You understand? So down, up. So this is direction. So the question is, how do I determine that? How do I determine the direction of an asset that I'm trading? Let's say the asset that I'm trying to say is, let's say Bitcoin is my asset. Or let's use relatable words. Let's say I'm trying to trade a car, right? Let's say I'm trying to trade cars, right? Let's say car. Let me use the word cars. I'm just trying to use relatable. This is the feedback, honest feedback from a very good friend of mine, and I think I really have to do justice with the very fundamentals, because not only am I speaking to veterans, but I'm also speaking to rookies and newbies who really want to understand how trading works. So let's say I'm trying to trade cars. Like, let's say I'm trading cars, and it's on the interwebs, or it's virtual, and this is the asset. Let's say this cars is the asset. I'm just trying to use relatable words so that people don't get confused. So the price of the car that I'm trying to trade on the interwebs, it either goes up or either comes down. Make sense? So it's like, how do I determine whether the price is going up, or how do I determine whether the price is going down? Remember, this is just a chart. What you see here is just a chart, similar to what we learn in high school, charts, graph, and stuff. So this is basically a chart that gives you an overview of my car, like the car that I'm trying to trade. The car I'm trying to trade is, let's say, this car. So it's like the direction either goes up or comes down. So let's say the value or the price of the car at this point was, let's say, 2, and let's say when it goes up it will be 5. So the difference is what, 3. So that's my profit, right? Let's assume that's just the way of trading using this example. So the question is, how do I know that if I buy at this point 2 is going to go to 5? How do I determine the movement? Because it means if I buy 2, it goes up to 5, right? So the difference is how much I made. That's my profit. How do you determine that? You determine using a script. You understand? You determine using a script, which is market cipher. That's the script I'm using. So we have several scripts. When you go to TradingView, TradingView is more or less like the charts that you can literally trade on. Like, you can literally when I say trade on it, it's like I'm trying to confuse you guys. It's a chart whereby I can infer direction from, and we have different kinds of scripts. This is what we see. Like, what you see right now is a chart. This is TradingView chart, and what I'm trying to use on TradingView is called a script. A script is where is a script is programmed to suit the direction of an asset. I know I'm using different words, but we have several kinds of scripts. Everybody has his own script, and depending on how well you understand it, so we all trade differently based on the script that we're using. So Market Cipher has its own script. Market Cipher is a script on its own, and that's my reference to, which gives me insight pertaining to the direction of these cars that I was trying to trade. You understand? So we have different forms of these waves that you see right now. We have different varieties. Like, we have different forms. You understand? Like, different forms of really, sorry, different forms of scripts. These are just different forms of script, different forms of script. You understand? Like, I'm not really trying to explain trading as in when to buy and when to sell. I'm trying to literally make you understand what a script is. So what you see right now is a script. This is Market Cipher. This is one side of it, and what you also see on top, also over here, these indicators are also part of Market Cipher. You understand? So every indicator has its meaning or implication on price. You understand? And what you also see here is, I wouldn't say an indicator, it's an oscillator, because it moves So let me remove the drawings and continue. Okay. So what you see right now is the red, sorry, the red and the green, the red. I want you guys to follow and the green. You understand? So it means we have a zero line that divides up and down. In other words, that gives us a regions of positive and the regions of negative. You understand? Like this is just the zero line which divides the regions. In other words, when it's green, it means it's positive. In other words, when it's green, this green represents liquid or money. When it's green, it means there is money in the assets. And anytime there is money in asset, price goes up. You understand? So when it's red, it means there is money exiting the assets. The asset that we are trying to talk about is the car. So when there is money in the positive territories, the price of this car moves from 2 to 5. When there's money outside, the price moves from 5 to 2. In other words, it increases when there is money, it decreases when there is no money. Again, this is just fundamental. So when there is liquid in an asset, price goes up. When there's liquid exiting an asset, price goes down. So this is one version of the script. Sorry, this is one version of the oscillators. We have several oscillators. This is one of them. And in trading, you have to realize that liquid determines direction. Liquid has an influence on direction. Don't forget that I talked about direction earlier on. That direction is basically I wouldn't say the ultimate form of trading, but direction is more or less like the premise of trading. You understand? Like asset moves in different direction. It goes up, it comes down, and consolidates. If you could recall, I said it earlier on the video. So it's like when there is liquid in the asset moves up. When there is liquid exiting the asset goes down. The price of the asset goes down. And you remember I used the car as an example. So what you see right now is basically green and red, which is green means more liquid, red means less liquid. And these are oscillators, so they literally move. They move. You can see they flow, they move, they go up, come, up, then comes down. You understand? So they move in accordance with time. So when I say time, means every movement is more or less like associated with time. And I know I'm not really trying to confuse you here, but all I'm trying to say is these oscillators moves, like they literally move. So it's their movement that determines the direction. So let's take a critical look here. We saw money in the positive. It was climbing, it was climbing, it was climbing, then it climbed. You realize that price went up. But the question is, do you really think that it's only money that determines the direction? No, not only money. So then it leads me to the other oscillator called momentum. So in other words, we have another oscillator that also oscillates similar to the liquid, but it has a different function on price. If you could recall, I said that money flow is an influential oscillator which determines the direction of price. But money flow is not enough to give you let's say enough movement of price. You need another backing influential oscillator. So in other words, if I have two influential oscillators saying the same thing, price goes up. When I say two, in other words, if I have two determinant forces of oscillators that has an impact on price hikes higher. Let me give you let me use relatable words for you guys. This is how I see oscillators. Oscillators are basically, let me say this is my vehicle. Let me try and break it down. This is, let's say I have a vehicle, right? Let me use a vehicle as an illustration for my oscillators. Let's say this is my vehicle, and for my vehicle to move from this point sorry, from this point to this point, I need certain sorry for my drawing, I'm trying to make it easier. Okay, so for this vehicle to move to this end, I need certain let's say elements that helps the movement, right? So this is how I'll use liquid. So I'll probably say this green or this money flow or this liquid is my fuel, right? So I have my fuel here. Then the other oscillator that I want to talk about is momentum wave, which let me highlight the momentum wave, which is this blue wave. These blue waves. This is also my engine. You see what I'm trying to do here right now. We talk about my liquid and we also talk about my engine. Then let me add another oscillator, which is my VWAP. Right, so I'll say this is my turbo. All right, so the yellow oscillator is my turbo. So I have my turbo and I have my engine, then I have my, bear with me people, I'm just trying to make it easier for people to understand, and I have my liquid. If I have all these elements in my positive regions, okay, so like I said, this is positive region and this is negative region. If I have all these functional elements in my vehicle, it means my vehicle can move faster to this end, because I have the engine checked, I have my turbo checked, and I have my liquid or my gas checked. So price, it means if I have these oscillators all in the positive, remember when you're in a positive, price goes up. You see, we had our engine, we had our money, and we had our turbo, means price surges up. What if we have the inverse of it? If I have my engine in negative and then my turbo in a negative and I have my liquid in negative, price comes down. In other words, so if I didn't have any engine in my vehicle, I didn't have any liquid in my vehicle, and I also didn't have my turbo, that my vehicle couldn't move. You can push it while it will move, but I mean, if you have your engine, you have your fuel, and you have your turbo, the car goes like faster. So it's like when I have it outside or when I don't have it within, price also falls. So this is just how price tends to react when you have majority of your oscillators heading towards the same direction, and when you have majority of your oscillators also heading towards the negative direction. Price goes up when they are in a positive, and price comes down when they are in a negative. So it's like trading therefore becomes, let me move the drawings. Trading now therefore becomes three things. Is either you have your engine, you have your turbo, and you have your liquid in the positive, price will go up, and when you have them in the negative, price goes down. So it's like when you have multiple of these influential, when I say influential, they have impact. But when you have one of them, let's say you have a single one of them in the positive and you have multiple of them in the negative, price will respond towards the very direction of the two much more than the one. You understand? If you have, let's say, well, let me say let me say something. The most influential of all is this momentum. Mostly you can have, sometimes, not mostly, sometimes you can have your turbo in a negative, your liquid in a negative, and price wouldn't spike like this. It might go up small and probably respond to the very direction of your other two oscillators, which is your liquid and your turbo, or your gas or your turbo. or your fuel or your turbo. So in short, like the most I wouldn't say, yeah, of course, the most important thing for you to know is trading is therefore up or down. Like you are trading an asset and it either goes up, it goes down, or consolidate. This is a typical example: up, consolidate here, then comes down. So how and what determines the direction of the upwards movement is based on your oscillators, influential. These are just indicators. These are just I would say these are just road signs. You understand? So what determines or what influences the very direction of your price or your assets or the price of your assets is, first of all, your engine, your liquid or your gas, then your VWAP. So if all of them are in a positive, price goes up. And if the same way they are in a negative like this, price goes down. I understand these fundamentals and we can deal with market cipher in general because trading is either upwards, consolidate, or downwards. You understand? Like, you know, I think this might be a part one of how trading works with market cipher. Like I said, we have several scripts. The script of reference or the script that I use in market cipher, and this literally summarizes everything about trading and with market cipher. Not necessarily the overall summarization, but just a summary of how it works. And like I said, I had to listen to somebody to literally understand the feed, literally understand how my explanation meant towards them. So I decided to break it down very like I'm trying my very best to use relatable words. I think one thing that makes trading hard for most people is there are so many jargons, and most people think everybody understands the jargons that they use. It's never true. It's what seems easier to you is harder for somebody. So I want to make this course or this training very it has to be very simple, like to understand. I don't want to use really sophisticated words or technical words to confuse people. I want to use simple words, basic words, and I know this is a very lengthy video, but I've documented the very essence for now. This is just the fundamentals, and I'm ready to also delve in deeper using relatable words. So until then, have a nice time, people.